Hello there and welcome to this week's edition of The Week Ahead. I'm Charlie Fuchs and joining me on the line is Valeria Bednarik of FX Street to discuss the big data releases of this week. Welcome, Valeria. This afternoon we see Russian retail sales and PPI data released. A trend shows that as retail sales have plummeted since the beginning of this year, PPI has rocketed. In light of the current geopolitical tensions in this area, do you foresee this downward trend continuing for Russia?
Well, indeed, Russian PPI stands at all-time highs as of resumption this year, right? While retail sales are falling monthly basis, and I believe this has to do with, of course, the Ukrainian-Russian woes, which are far from resolved. So yes, I do expect the downward trend to continue. I want you to consider also the sanctions that are being imposed from the West. So far, mostly focused in financial bans, right? But Russia has also banned other assets coming from Europe, such as agricultural products, So despite one may think this should boost local consumption, the reality says otherwise. Nevertheless, I'm not sure how long I will be trusting Russian numbers. Moreover, if the crisis escalates, I believe they will. They may do as Japan some years ago, reporting to the world a better picture than the real one. So numbers will become not reliable. You know what I mean? Anyway, I don't see much of an upward trend in any fundamental data coming from Russia in the upcoming months.
This week is hot with data releases from the UK, including a series of releases from the Monetary Policy Committee. What is your forecast for the outcome of this data in light of the Eurozone's current struggle? Do you see the UK's interest rate rising in the near future?
You know, this is a bit more complicated. There's a lot to say about this because it was over a month ago when Carney shocked the markets over a weekend, right, stating that rates will be rise sooner than the market expects, right? So that triggered a strong rally in pound, soared above 170 against the greenback. And for the upcoming weeks, Carney and all the board members had been trying to down-talk that strength, right, saying that, well, maybe not as soon after all. Besides, employment figures were weaker than expected, showing a drop in waves, and that put pound in a bearish movement against most rivals, right? Last week we have the quarterly inflation reports in the United Kingdom, and again, Carney said that rates will rise, but only if wage growth picks up, right? So the market continued to price in a later rate hike in the UK. And again, this last weekend, yesterday, I believe, Carney gave an interview to a local newspaper, right? And again, he said that he's ready to rise rates regardless wage. So pound is back up. So actually, market is watching the upcoming readings in the United Kingdom, mostly minutes from the Bank of England on Wednesday, I believe, looking for a change in voting, right? We have 9 voting members, and the 9 have been steadily voting for keeping rates steady, no changes in current policy. So ever since the first statement from Carney over a month ago, market is looking for that 900 to change, right? To at least one of those members to vote that for a rate hike, okay? For a sooner rate hike. And the fact is that over the last 2 months we have seen the 900 steady, no changes in votes, and minutes have been disappointing. I do believe that this week we are going to see exactly the same, right? 900. We are not going to see any change in there. I don't believe the situation in England has to do with whatever is going on in Europe. They are trying to keep themselves independent, and they have managed to do so. So I believe the market will be a bit disappointed with the reading, with the minutes this Wednesday. We have United Kingdom inflation also, right? So if we have a strong reading above expected, well above 2, then that may help pound also. But for the fundamental side, from the central bank point of view, I don't expect no surprises this week, honestly. I believe it will be a bit of a disappointment for the market.
And finally, jumping the pond to Canada, on Friday of this week, we see Canadian inflation rate data released. Over the course of 2014 so far, core inflation rate has been on the rise. Do you think this trend is here to stay?
I have been doing a little research and I found that annual inflation stands at fresh 2-year highs, right? And that exceeds the central bank target, and therefore it's posing a challenge to the bank's view that recent strength in prices temporarily. But the fact is that the Bank of Canada believes that the recent surge is temporary and forecasts that the overall inflation rate will drop below the bank's 2% target next year. So as long as they don't show signs of concern, chances of a rate hike in Canada will remain limited. You know, everything is about rate hikes these days. Market is bored with central banks keeping rates at record lows for years already. So all the data that we get related to that decisions, meaning inflation, consumption, that makes market run to try to price in when this or that economy will hike rates first, right? And I believe that the Bank of Canada is not one that we should worry about these days, okay? I believe they will keep rates steady, and there's not much chance right now of a rate hike despite rising inflation.
Thank you, Valeria, for your market insights for this coming week. Well, that's it for today's Week Ahead, but continue to click back on the Dukascopy site for more news on the Forex markets. Goodbye for now.